Okay, so we are ready this time. All right. you know, First let's do the legalities and then we'll kind of get into an explanation of what just happened. Um, as always, read the disclaimer. Past performance is no indicator of uh, future performance. We are not registered investment advisors. Anything in this show should be for entertainment purposes only. Nothing in this show is an offer to buy any securities, anything like that. Absolutely consult a professional before making any investment decisions, okay? And read the whole disclaimer, okay? So let's give everyone a chance to sign back on. Looks like we got people straggling back in. Nice, nice, nice. So, this is an important lesson that we learned a while ago about technology. Always have a backup cord for everything. You see, we just had a cord burn out. Boom, we're back on the screen. So we're actually pretty happy with ourselves right now. So we should be coming through live, loud and clear. So we just had a cord that burnt out. But like I said, the smart guys, we always have a backup cord. Our tech guys are super. So you guys, as always, read the disclaimer. We should be coming through loud and clear now. Let's go ahead and get started. So it was kind of a lethargic day. It was, it's a nice green day. We started off red. Seems to be the trend going the last couple of weeks, right? Overnight futures get real ugly. You get a lot of the back and forth. Trump usually comes out with his tweets a lot of times night when the Asian markets, European markets are open. And it affects futures. And then the futures kind of bleed into the open, where that first half hour is nice and red, but it seems that we've been recovering off that every day. So today is kind of important in the sense that we got a fifth straight day of gains from the NASDAQ, which is the first time since May. So, you guys remember last week, CNBC, we talked about it. Thank you, Samuel. CNBC, we talked about it last week, with Jim Cramer and all them, how they were parading people on, how it's the end of the FANG, how it's the end of technology. Is this the end of the bull market? Because the bull market was driven by technology. If technology's leaving the arena, then guess what? There's nobody left to play. So it's kind of an interesting thing because since then, it's just been a big, big recovery by FANGs. Facebook had a huge day today. Twitter, which is not a FANG, had a huge day today, but it's also one of the most important social media stocks. And you just had across the board good days. Google, Amazon, Netflix, right across the board. So if you had panicked, if you had taken that advice, if you bailed on the FANGs, on your technology trades, you'd probably be pretty irritated right now. And let's kind of get into the market. Some big news today, big in a sense for us that are bull, believe that the bull market's still continuing. Morgan Stanley and Goldman Sachs came out today and they called for 3% GDP for the rest of the year. This is in contrast to Jamie Dimon over at, I forget where he trades at, but anyways, you guys know Jamie Dimon, especially you Bitcoin players, right? Remember when he crashed Bitcoin a few months ago? And then we found out his fund was buying it. Nice, very nice. But anyways, he's talking about a 5% interest rate on the 10-year. Look, this is all the stuff you need to avoid as a trader, as an investor, as a wealth builder. It's just ridiculous the way it's going. We've had this big, the world is ending every time the 10-year goes over 3%. We've been telling you 4%, 5% is normal for a strong economy and for some very good growth and to get the financials back into the bull market and pushing the market up. So 5% doesn't scare us. Now, why would you come out and say that? Well, he's saying that it might be the end of the bull market and stuff. We'll see. Remember what we always say about Jamie Dimon is remember Bitcoin, okay? And we like to think that Morgan Stanley and Goldman have a better grip on the overall market anyways. And the big news today was really nothing here or there about the stock market, but Facebook and Apple banned everything Alex Jones on their platforms. So, is this a big First Amendment thing? Is it right? Is it wrong? And that's not for us to debate, but it's interesting. It's interesting how they've decided to go after these kind of formats, right? Whether you agree with them or not, whether you see them as hate speech or not, whether you see them as inciting violence or not, Alex Jones is not the only one out there. And, you know, are we doing this across the board? We've been talking about this for one or a couple of weeks now with you guys. Is this being done evenly across the board? You know, are we going after everybody, or is it just we've got some high profile targets to kind of ease the shareholder pressure and to ease the public pressure, the social media pressure, right? You have to ask yourself that question, because YouTube jumped onto it today. But guess what? Twitter says Alex Jones doesn't violate their policy. So he's still up on Twitter. And it's interesting, right? Twitter just came off all this heavy duty shadow banning accusations and conservative silencing and things like that. So you see how it's an interesting interpretation of exactly what does constitute this kind of speech and what doesn't. Okay. So let's see how that plays out. It's not really here or there. Look, we're long on Twitter right now. You guys know that, but Twitter had a great day today, so it looks like we timed this just right. It went off that big $40 last week, and it kind of pulled back. We thought that was overdone, so like we were talking about, we bought Thursday or Friday. We got into that, and it's sitting real pretty. You want to let's talk about a little bit about what we're doing going forward. Because today we didn't really make any moves. We watched the market. It was a nice market. We got a lot of what we wanted out of the market as our traders ourselves. Hope you guys did too. If you're not, then you know what to do. But going forward, right now we're short GDX, which is the gold miners, and we're real happy with that. You know, we were looking for an opportunity all week last week to short, and you know, gold kept trickling down, and trickling down. And we were looking for a bounce so we could short into that, because obviously we wanted to get the best premium prices we could, and maybe get a little bit better of a strike price. And we did, and we shorted it into that strength, and it just turned right around. Spot gold's having a lot of trouble. Let's get a gold quote while we got all you on TV here, or not TV, the internet. Excuse me. I'm old. Anything with broadcast is TV. Yeah, so gold ended up down about 750 for the day. So, you know, it's doing exactly what we thought it would do. We're also short AT&T. Telecoms generally don't take the high interest rates well. That was another one. We were looking for a good point to short into it. We didn't get the Fed raise. We didn't get a rate raise with the last Fed meeting. So we'll probably get one, I believe it's next month. They're slating it for the next month. But this will start digesting into the stock. So we're in a short play on that. And we're still in AINV, which we've talked about, and the other plays we've been discussing. Forward looking, the market looks strong right now. It looks very, very buyable. It looks like it's very stable. Now, that's not to say some kind of global event or some kind of news couldn't come out that kind of throws it into a tailspin like it has in the past. Think back to April. But we're in good shape right now, and it looks like we're going to keep progressing, and let's keep the right attitude. You know, we always talk about this with our members. We just kind of want to segue into something right now. You know, we talk about it with our members all the time, and you as a trader, an investor, wealth builder should do this also too. This is advice from us to all you guys that are so loyal to the show. You know, one thing too many traders do is they just get so caught up in the hype. They get so caught up in the pump. They get so, you know, like Samuel always likes to say, it's an overload of serotonin. You know, and it doesn't make any sense, because, you know, you're always in this hype, so you're never really getting any real view of the market. But we like to always tell our people, it's just like on Fridays, if there's nothing happening about, you know, going into lunch, coming out of lunch, we'll literally say it. Look, we're done for the day. Everybody enjoy your weekend, get started early. We'll do that on a weekday too. And we always tell our members, hey, look, when the market's closed and life is ready to be lived, go live your life. Why? Because you need some quiet time. You need some time to really think about the oh my goodness, welcome. But you need some quiet time to kind of digest, because there's something very important. And this, a lot of people associate this with meditation and spirituality. But as a trader, you can really, really use this to get yourself in tune with your inner self, with your portfolio, and the stock market. And so let me just share this with you. Oops. Missed the button there. Your mind will answer most questions if you learn to relax and wait for the answer. Sometimes the smartest thing you can do, and we always talk about this in our group, is sometimes if you're not sure what to do, don't do anything, right? There's an old saying, if you're digging yourself in a hole, what's the first step to getting out of that hole? Stop digging, right? How do you stop digging? Wait, you got to stop, relax. It's always important, and this kind of plays into spirituality. This kind of plays into your zen as a trader. You know, you don't want to lose your hair over the market. You don't want to have crow's nests over your market. You don't want to have gray hair over the market. And the market can do that to a trader if you let it. But always relax. Always take the time to let your mind be free enough that the answer can come to you. Because many times the market's speaking to us and we're just not listening. We're so concerned with somebody making a trade here, or somebody called a bullish call here, or somebody on TV said the fangs are going down, that we forget to listen to ourselves, to listen to the market. The market will tell us everything we need to know. All we have to do is listen. So that's our saying for the day. So let me go through the comments today. You know, it was kind of a quiet day today. So thank you all for joining us, and welcome, Lucy. It's an honor to have you. Let's see if anybody got any questions. Let's see here. Not much on the question side. So we're going to kind of just roll it out. Okay. So just remember, absolutely remember today's quote as make it religion with you. We hate to use the word religion because there's a stigma to it. It's spirituality. It's Zen. It's your oneness with the market. But just take the time to stop and just think and relax and just let the market talk to you, okay? It sounds crazy, right? You're probably thinking, man, the guy's loopy right now. What's going on? They're drinking over at the studio. No way. This is one of the most important things you can learn as a trader, how to quiet yourself and how to listen to the market, okay? And we'll talk more about that this week because it's really a good subject. But look, we're bullish going forward. We're short the gold miners. That's working out real well. We went long on Twitter late last week. We're up about 17% on that. Let's see if we get another push. We still got the Snap trade. Snap's got earnings tomorrow after the bell. Excuse me. And we're short TNT, AT&T, which is the symbol T, because we think the interest rates will catch up with the telecoms here, and we're just outside the money on this strike. We're a nice strike on that. We got real good pricing on it, just like the GDX. And look, if you're not getting these kind of results, you know where to click, you know what to do. But let's welcome Tala. And you know, it was a good day in the market. Let's all rest up and remember what we said one more time, okay, for all of you that are hard of hearing and hard-headed out there, okay? Take the time to step back. Take the time to take a deep breath. You know, you used to hear people say it. Take the time to smell the roses. You got to do it, okay? Take the time to spend a little bit of your profits. Take the time, you know what I mean? But most of all, quiet. Listen to the market. Stop talking to the market. Stop telling the market what you think it should do. Stop telling the market what Jim Cramer says it's supposed to do. Let it tell you what it's doing, okay? And you can only do that if you reflect quietly, okay? So look, all you guys have a great Monday. It's a great start to the week. We're super excited. It was a quiet day, kind of mellow, nice to come off the weekend like that. So let's all take some time, get some Zen, and we'll be back tomorrow after the market, okay? Thank you so much for joining us. We'll see you tomorrow.